Okay, good morning all. As people start to filter in, we'll make a start to the session for those who have been waiting patiently on the line. So thank you very much for joining us all, our clients, contacts, and friends of the practice that I see on the attendees list this morning. We're going to spend 45 minutes going through the latest on the rate change, and of course, there's a lot that we know at the moment from the amendment law that's been published, guidance published by the NBR, but there are also some practicalities which have come out of the last 10 days and indeed the run-up to the change of the rate of VAT in Bahrain. Just to introduce the presenters this morning, we have me, George Campbell, and the head of the tax practice at Keypoint, covering all of our jurisdictions. And I'm also joined this morning by Mohammed Ismail, who has just recently joined Keypoint's tax practice back in December. And he joins us, we have worked together previously at a Big Four in Saudi Arabia and Bahrain, doing some very similar things to what we're now doing once again at Keypoint. But in the meantime, between leaving that Big Four and joining Keypoint, Mohammed's worked at a huge financial institution in Saudi Arabia, one of the largest Islamic finance organizations in the world. And he worked there through the rate change in Saudi Arabia in 2020. Therefore, he has really quite significant practical experience in how to deal with the issues that arise from a change in the rate of VAT. So this will be Mohammed's second rate change. It is my fourth, having come from the UK and seen the rate change there twice and twice here in the DCC. So a lot of experience to share with the audience, and indeed Mohammed's experience seeing this in-house and how his organisation dealt with this and how you may consider dealing with this will be particularly, hopefully be particularly useful to you, insightful, but it may also raise questions, and if you do have questions, please use the Q&A widget to lodge those questions, and we'll do our best to answer them within the time given. We have a lot to get through this morning, so let me just give you a brief overview of the agenda. We'll briefly touch on, again, the VAT amendment law and associated transition rules. That's just to make sure that we're all starting from the same page. But then what I want to cover is the recent clarifications. Those have been quite useful because when we were first given the amendment law and the transitional rules, there were a lot of questions as to particularly what constitutes a contract. We noted that we had no invoicing rule for transition relief, unlike Saudi Arabia had back in 2020. And as you see, there is some relief in relation to invoicing, but it's more about whether something has constituted a contract or an agreement between parties, one to do something and another to accept that supply, and there being a consideration and certain specific details around what will be provided. Now, there are some grey areas that remain. We'll talk about those and how businesses might seek to overcome them. And then we'll talk about some industry-specific issues. Obviously, no VAT rate change is the same for all businesses. It affects different sectors differently. So we'll talk about some of the industry-specific issues, and then what you should be doing now, what you maybe should have been doing in December, but certainly what you need to be doing in January, and things that you will need to consider as you continue to adapt to this change in the rate in VAT, of the VAT rate. So just to touch briefly again on the amendment law, the transition rules, what reliefs we have, where can we charge 5% VAT, and where must we continue to charge, where must we charge 10% VAT? Let's just go through the changes that have been affected and what it's going to mean. So ultimately, anything from the 1st of January 2022 supplies of goods and services will be subjected to 10% VAT, as mandated by the VAT amendment law. But there are some transitional rules that, like we saw in Saudi Arabia in 2020, will allow taxpayers to continue to apply 5% VAT on the supplies during the course of 2022. Now, I say allow taxpayers. The imposition or the use of those transitional provisions to continue to apply 5% VAT to supplies which qualify is mandatory. So when you look at the legal provisions say the taxpayer shall rather than the taxpayer may, which means it's not optional. So Saudi Arabia, the application of transitional provisions to charge the previous rate of VAT was optional. In Bahrain, it is not, and therefore it puts added pressure on businesses to comply with the transitional rules and really look carefully at their contracts and arrangements to work out the rate of VAT which should be applied. So the amendment law was issued, as were a number of FAQ responses and transitional guideline guides, but focusing on the commonly asked questions, the common issues which come up during a rate change, and how the mechanism works in relation specifically to when you need to charge 10% VAT, how that will be dealt with, and the documentation that will be required in order to deal with that change. Now, it's really important to note to the audience, even for us as a business to consider, the fact of life is that most, if not all, businesses will have to, in some way, shape, or form, whether it's on their supply side or their purchases, deal with running dual rates of standard rated VAT during the course of 2022. And that's going to mean certain things for controls, procedures in relation to monitoring contracts, and also systems issues which will need to be contemplated in order to make sure that your accounting system can deal with the changes and running two rates of VAT. So if we can move on. When will supplies be subject to the standard rate of 5% of VAT? So something you may be dealing with at the moment is you've completed something before the 1st of January 2022. So you've supplied goods, or you've completed a supply of services before the implementation or the effective date of 10% VAT. Now, if you've done that, if you've supplied it in 2021 or before, and you're invoicing in January 2022 or receiving payment, it doesn't matter. The supply should still be subject to 5% VAT. And that follows basic time of supply rules, as long as you've not received upfront payments or issued invoices in advance. As long as you've completed that supply before the end of the year, then it should still be subject to 5% VAT. So that's even if you invoice it in January 2022, or you receive the payment after the changeover date. Now, in relation to arrangements which do not fall within that qualification, the transitional rules may apply. If you have a contract which was signed before the 24th of December 2021, as long as that contract is not renewed, amended, changed in any way, and we'll come on to what constitutes a contract amendment, then you may continue to charge 5% VAT on supplies made under that contract for the remainder of 2022. Anything falling into 2023 and beyond will be subject to 10% VAT, regardless of when the contract was signed or if it's not been amended. So if we look at two examples, stationery supplies were delivered in 2021 but invoiced in March 2022, or payment was received after the 1st of January, that supply is still going to be subject to 5% VAT. So in your invoicing, your accounting, you're still going to need to run a 5% rate of VAT. If we look at something which may fall within the transitional rules, then, for example, you signed up to for a fixed fee telecom service earlier in the year, and it will last into 2022. As long as nothing in that contract changes, you should still be charged 5% VAT on the supply of your telecom services, provided the contract that you signed with the telephone provider was signed before the 24th of December 2021. That is a transitional contract. Like I say, as long as nothing is amended, changed, extended, renewed, then that agreement and the supplies made thereunder should still be subject to 5% VAT. So all of you, if you've signed agreement for your mobile phone or your landline or broadband before the 24th of December 2021, have a careful look at your telephone bills when they come through. Make sure you're being charged the correct rate of VAT. You may want to raise it with the provider if they're charging 10 without good reason. So moving on to what will be subject to 10% VAT, bear in mind that if you charge 5% and you should have charged 10, you as the supplier will be on the hook for the additional VAT and potentially penalties on top of that. So anything supplied on or after the 1st of January 2022 that is made under or supplied under a contract which was signed from December 2024 onward, 24th of December 2021 onwards will be subject to 10% VAT. As I mentioned, an amendment or renewal or any significant change to the contract, if that's made on or after the 24th of December 2021, even to a contract which would otherwise be eligible for transitional relief, that will effectively stop the application of transitional relief, and the supplies made under that contract will be subject to 10% VAT from the date of the amendment. And then anything spilling into 2023, for example, long-term continuous supplies, policies of insurance, for example, a long-term 2-year agreement for telecom services, for example, anything supplied on or after the 1st of January 2023 will be subject to 10% VAT. So the transitional relief window effectively ends at that point. So if we look at a car which was delivered in 2022 and the contract was signed on 28th of December after the date of the amendment law was published, and after the transitional relief date of the 24th of December 2021, that supply will be subject to VAT. Similarly, even if you have a contract, in this case, an advisory memo, so it could be tax advice, signed under a contract which was agreed in October 2021, so otherwise eligible for the transitional provisions, but a price increase was agreed on the 2nd of January 2022, and the memo was delivered thereafter, that entire supply will be subject to 10% VAT. The amendment on the 2nd of January, before the supply was completed, actually has the effect of nullifying the application of the transitional reliefs, and 10% VAT must be applied. So businesses must be very careful to make sure that they not only evaluate the contracts that they currently have and whether they qualify for transitional relief, remember it's mandatory, but also keep an eye on the contracts that they already have running to make sure that those aren't affected by any amendments. Now moving on to contracts and amendments, and I think the list of amendments is particularly important because there are a number of things which can effectively disqualify the application of the transitional treatment. If you make an amendment to a contract, which, as I say, may have been eligible for transitional relief, the transitional relief application terminates on the date that you make that amendment. So if you make it, in 2021 after the 24th of December, it will terminate pretty much everything covered, the application of 5% VAT for everything covered under that contract. In 2022, 2023 onwards, it will all be subject to 10% VAT. It's an anti-avoidance provision. It's meant to stop businesses adding things to contracts to try to continue to benefit from 5% VAT. And this could arise, for example, where that is an absolute cost to a business that wants to lower therefore its VAT cost. It goes back to the supplier, it asks for additional things to be added under the contract. The NBR says, no, that will be a contract amendment, and you must start applying 10% VAT, everything which is supplied under that contract from the amendment date. So it's a really kind of severe consequence, and it means you must really keep a close eye on your transitional contracts. Examples of amendments: what could constitute an amendment to a contract? Well, extending its duration, that's an obvious one. That is naturally where customers may try to get the benefit of a 5% rate of VAT on additional supplies. NBR will say that is an amendment which disqualifies the application of transitional treatment. And I'll let Mohammed talk when we come on to his section of the presentation. I'll let him talk to you a bit about what that could mean and some grey areas around extensions, renewals, which you may not have already considered. Adding extra supplies, again, that's an obvious one. People trying to benefit again from the 5% or continued application of 5% VAT. Changing the nature and type of supplies, that could be problematic because occasionally, and for very good commercial reasons, the timing or nature or type of supply, when it's delivered, how it's delivered, what is delivered or supplied, may change for very good bona fide reasons. But again, the NBR is taking a very broad view as to what constitutes a contract amendment, and therefore any change of this type, whether it be to nature, type, timing of supply, may be caught by the amendment disqualification. And then finally, increasing the consideration of the supply. Situations could occur where taxpayers say, well, increase the consideration of the amount payable on this supply under the 5%, and we look at a discount on something else that's being supplied. That is, again, a specific anti-avoidance provision to stop continued or artificial benefit of the 5% VAT on supplies made from the 1st of January 2022. So mandatory transitional rules: if you have to apply 5% VAT, you must apply it. If you must apply 10, then that's the rate you must apply, and you must be very careful not only to apply and apply the correct rate, but also monitor your agreements, whether they're amended and whether transition relief ceases and you must start to charge 10% VAT where you were previously charging 5%. So some very important pillars of this transition to keep in mind. But let's move on to some of the kind of practical aspects, and particularly what the recent clarifications have been, because these have been very helpful. We've been adapting to this rate change since the announcement was made back in September that it was going to be the case, and we were flying blind for a while up until the 23rd of December, when the transitional rules were finally clarified. But even then, and as is natural with cases such as this, there was remaining doubt, and some things have recently been clarified by the NBR, whilst some grey areas remain. I'm going to pass over to Mohammed to take you through those recent clarifications and where the grey areas still exist.
Good morning, everybody. Thank you, George, for kicking the start of this webinar, taking us through, the VAT amendment law, its associated transitional rules. And as you stated earlier, those rules, transitional rules are mandatory, and businesses do not have an option to go on a super prudent basis and apply 10% VAT to all supplies falling in the year 2022. But they need to apply 5% when the supplies meet the conditions for applying those transitional rules. And the main condition was the contract signing date. And so when the VAT amendment law was published, so there was a lot of certainty as what constitutes a contract, because again, VAT is a transaction-based tax, and the way that our transactions being agreed across businesses, industries are not consistent. And so the first question was, so what constitutes a contract? And the MBR came with a clarification recently through its FAQ section, which stated that contract should, for the purpose of transitional rules, should be in substance reflect an agreement between supplier and a customer, where there is like a legal commitment, legally binding commitment on the supplier to provide specific goods and services that have specified the quantity, the delivery schedule, and the defined considerations. So all the aspects of the supply are defined in such agreement, and that such agreement is binding on the supplier. And if you have any sort of arrangement which meets such condition, then this arrangement can be seen as a contract for the purpose of applying the transitional rules. And so the question is now what about the master agreement and the purchase order? So the situation here that, the master agreement itself, it's considered as a contract, but then there is a purchase order which reflects, an instruction for the delivery of the goods or the service. And the MBR came in and says, well, master agreement in itself does not meet the condition for being a contract. But if you have an associated PO that has been issued and accepted, where all the elements that need to be covered are covered, which is the type of goods, the quantity, delivery consideration, etc., then each PO will be considered independently in isolation of any other POs relating to such master agreement as a contract for the purpose of transitional rules. And therefore, as a practical implication, if you have a PO that has been issued and signed before 24 December for goods to be delivered in the year 2022, and assuming that such PO has not been amended before the delivery of the goods, then such PO will be considered as a qualifying contract for the purpose of the transitional rules. And also the MBR added that, there will be certain cases that where there is no contract, no PO, and then all the agreement is reflected in the form of an invoice. And the MBR stated that it's willing to accept and consider the invoice as a contract for the purpose of transitional rules, given that those invoices have been either paid partially or fully. So the payment against such invoice will be deemed as amounting to a signature of the contract, with the signing date taking place as the later of the invoice date or receipt of payment. So let's say you go, for example, to a retail shop and you order something towards, let's say early in December, let's say furniture or something to be delivered during January 2022, assuming that there is no such like a PO or a contract there, but the only document that is in place, it's like an invoice raised by the supplier to the customer, okay, let's say for an advance payment in relation to such supply. So assuming that the invoice issuance and the payment date take place prior to 24 December, then such invoice will be considered as a contract signed before 24 December, and therefore the supply of those goods in January 2022 will be deemed as a supply falling under the scope of the transitional 5% VAT rate, and therefore, should be subject to 5% rate, not 10%. So contract was a matter that that brought a lot of clarity to the industries and gave guidance on what type of arrangement will be considered as a qualifying arrangement for the purpose of transitional rules. We can move on to the next slide. So the subsequent clarification that came in, so it was about the tax due date for the additional VAT, where a supply that has already been subject to 5% VAT rate earlier, but as a result of the VAT amendment law, it became subject to 10% VAT, whether 10% is applied fully or partially. Okay, so now we are saying that, okay, based on the tax due date, such supply has already been subject to VAT, right? But now the VAT rate that has been previously declared, it was incorrect in the light of the VAT amendment law. So when shall I declare the 10% VAT? Okay, and these situations can be generally of two. So the first situation that you have is, let's say you have a continuous supply, okay, and you have issued an invoice or received a payment in advance prior to delivering the supply, okay? So you have declared 5% VAT, but such supply will be performed partially or fully in the year 2023, which means that that portion provided in the year 2023 will be subject to VAT at 10%. Now, the tax due date for the additional VAT, right, will be on the law enforcement date, which is 24 December 2021. So taxpayers will be expected to declare the 10% VAT during December VAT return. And the way to declare the VAT, you need to declare the whole 10% rather than just like the additional 5%, but you would need to go back to the VAT return that you have declared the 5% VAT and adjust it downward, and the net result will be payment of the additional VAT, which is 10% minus 5%. And a real scenario will be software license that has been granted for a 3 years period, paid in advance in June 2021. Okay, so because it's a 3 years, then it will be expired in 2024. So whatever portion relates to 2023 and 2024 need to be subject to 10%. Okay, so taxpayer would need, in this case, assuming that the taxpayer has declared the 5% VAT in June 2021 VAT return, such supplier would need to go back to June 2021 VAT return and reduce the value of supply to the extent it relates to 23 and 2024, and take this portion and declare it in December VAT return, December 2021 VAT return, and declare the 10% VAT. Another scenario where we have an invoice issued or a payment received prior to the supply under a qualifying contract, but prior to making the supply, there has been an amendment to this contract. And as my colleague George said at the beginning, that the amendment of a contract will nullify the application of the transitional 5% VAT rate, okay? And in the case of, we said that in the case of a supply straddling 2023, right, the additional tax due date will be on 24 December 2021. But in the case of an amendment, it will be the amendment date. So let's take a real example. So let's say you have an annual management fee for which you have charged in advance in June 2021. So in June 2021 VAT return, you have declared the annual fee as subject to 5% VAT. Okay. So, and assuming it covers that from June to May 2022. So when the year 2022 comes, that in January, you have agreed with the customer on additional fee. Okay. So from January until May, so this additional fee first would be subject to 10% VAT. In addition to this, whatever annual fee you have received in June 2021, which relates to the period from the amendment date up to the expiry date, will also be subject to 10%. And the way to declare such 10% VAT to be in January 2022 VAT return, which is the VAT return for the period during which the amendment was effected. And again, you would need to go back to June 2021 and amend the value of supply that has been subjected to 5% downward. So those are the two areas that have been clarified by the MDR, which we consider to be critical. And so some of the areas still remain uncertain and clear And now we will move on to the next slide to see what are those areas and what could be, you know, the practical ways to handle them while waiting for the MBR clarification. We can move to the next slide. So import of services. So when the VAT amendment law came in, it contained, you know, indirect reference to import of goods and services as falling under the transitional rules. But then the transitional rules were to be clarified under a decision to be issued by the MBR CEO, okay? And the MBR CEO decision has not referred to the import of services as being part of the transitional rules, which technically means that, you know, imported services will not be covered by the transitional rules, and therefore, to the extent those import of services are performed or received in the year 2022 or after, that the value of such supply should be subject to 10% VAT. So as a prudent approach is if you have made any payment that relates to services that will be performed from the year 2022 and after, our view that the prudent approach is to declare the additional, to declare the 10% VAT in relation to that supply in December VAT return, just like to be on the prudent and to be on the safe side. And also, like, you would need to have like supporting documentation that substantiate your position when applying the reverse charge, and so as well as, you know, the VAT amount in relation to reverse charge supplies need to be recorded in the invoice. So we expect that invoices that carry 2 VAT rates to be applied through the reverse charge mechanism to be recorded on the invoice. Second thing that is yet to be clarified is contract renewal versus extension. Okay, so what is the difference between them and how different they will be as to the application of the transitional rules? So contract renewal is basically to renew an existing contract, which will give rise to a new contract. Okay, based on the current wording and the current guidance, right? A contract renewal should not impact the old contract. So 5% VAT can still apply to the old contract, regardless of the renewal, because the renewal will be treated as a separate contract, and then, you know, the new contract will be subject to 10%. But for contract extension, as of the current guidance, MBR views the extension as an amendment of the contract, and therefore, so if you, let's say, renew a contract partially via an extension, such that the 10% VAT will not only apply on the services that are subject matter of the extension, it will also disqualify the application of 5% VAT to whatever remaining supplies to be delivered from the extension agreement date. So taxpayers may start considering to do the extension under a separate contract as if it's sort of a renewal, just to try to substantiate the fact that, you know, this is not an amendment to the existing contract, but it is a new supply for additional period or for additional quantities. So the existing supplies under the existing contract do not get impacted by such extension. And now I would hand over to my colleague George to talk about the industry impact.
Thanks for that, Mohammed. That was really a good run through and very important points there on when the tax is due from the enforcement date of the law, the 24th of December, which is very interesting. In Saudi Arabia, we were given a bit less clarity. The NBR helpfully has given more clarity, but it's a very early date to be paying tax on services that will, for example, be rendered in 2023 or 2024. And also the points on being really careful with amendments to contracts. Do we actually want to extend this agreement? Is it going to impact the supplies, made that were previously agreed from that date? I think that the safest approach, the most a prudent approach that you can take on any renewal or amendment is that you put them under separate agreements and almost ring fence the things that will be subject to 10% VAT and limit your exposure. Okay, so moving on, let's talk about some of the industry specific impacts, because like I said, this rate change will affect different taxpayers differently. So these are some of Bahrain's major industries. Let's start with retail and leisure. An interesting one that springs to mind with me is hotel bookings made in advance. If you're a hotelier, you've agreed that you will supply a room to someone. You made that agreement before the enforcement date of the law, before the 24th of December 2021. You've agreed the consideration, the room type, the date to stay, and therefore you have written evidence of what you will supply and when and to whom. But if the customer arrives in 2022, for example, to take up his stay and changes his room rate, changes the room type, maybe there's an upgrade, maybe he wants to add breakfast or a different board basis to his booking, then that all is likely to affect the supply itself and could mean that your previously agreed booking under 5% VAT suddenly becomes subject to 10% VAT. So you need to be very careful with things like that. Mohammed, maybe you want to touch on the second point, because we're talking about finance by IFIs here. Do you want to touch on this point number 2?
Thanks, George. Yeah, so a critical point with regard to the application of the contract transitional rules is sales of cars where a financial intermediary is interposed between the dealer and the customer. So let's say it's a finance lease or a hire purchase. So the bank or the financial institution will buy the car and then supply the car onwards to the customer. We've seen that MBR's view in the guidance on financial services, it's stated that it constitutes 2 supplies. So supply 1 from the dealer to the bank, and then from the bank to the customer. And it's important here, as with regard to the application of the transitional 5% rate, to consider the contract with your recipient from a VAT perspective, i.e., so if you have, let's say, the customer comes to you as a dealer and and books a specific car, okay, but then the dealer knows for a fact that the car will be supplied to the bank following, let's say, a purchase order or a purchase contract from the bank. And therefore, the car dealer cannot rely on the customer booking date as the contract signing date. So if it comes before 24 December, this is not relevant. What needs to come before 24 December is the purchase order or the purchase contract signed by the bank. So if this comes before 24 December, then 5% VAT should apply on the delivery in the year 2022. If the purchase order and its approval comes on or after 24 December, then the dealer needs to apply 10% VAT to the bank. The bank, in turn, needs also to look at the finance lease agreement signing date with the customer. And if the finance lease agreement precedes, let's say, the purchase order, it can be a case that, the sale of the dealer to the bank is subject to 10% VAT, but the supply from the bank to the customer will be subject to 5% VAT because just of the relevant contract signing date.
Thanks, Mohammed. So some very interesting and very important considerations there. The next industry I've highlighted was construction, and with construction, things can vary quite quickly, significantly, or indeed in minor terms. So even minor contract adjustments, milestone changes, changing types of material, time of delivery even could impact the contract, could constitute an amendment, and could mean that 10% VAT must be charged and transitional relief will apply. Now, much of construction is zero rated, but indeed there are things in there that are standard rated. And on that point, if you do have standard rated elements of an otherwise zero rated construction project, for example, the construction and installation of a swimming pool, do you change the time at which you construct these things in order to make sure that the tax or the time at which that's delivered does not impact the application of 5%? So do you build the swimming pool in 2022 rather than 2023, when that supply and isolation certainly would be subject to 10% VAT? But in either way, do you change the time at which you supply things under transitional contracts, and then does that constitute an amendment? Does it change the treatment of standard rated delivery and supply under the entire contract? So things to be careful with the construction industry. Financial services, Mohammed, again, given your expertise on this one, let's give the floor to you, because there are some big issues for FS organizations.
Thanks, George. Yeah, and just like to add just one last point on the timing for construction of standard rated portions. And so in construction, you generally receive the consideration and milestones, and in the each payment tranche, you need to attribute what is zero rated and standard rated. And therefore, considering when the swimming pool will be constructed is important, because you need to apportion a certain part of this consideration if it relates to swimming pool and apply the correct VAT rate. Jumping to the financial services. So financial services are heavily exempt business sector, and VAT, while they are not an end consumer, it becomes a cost to them, and a higher standard rated rate means that financial services provider will be absorbing more VAT due to irrecoverable input VAT costs. So and this could could open the eyes of the financial service providers to start considering saving opportunities, optimization, whether it would be in the form of direct attribution or special partial exemption method, etc. And this is an input VAT aspect. And then if we have from output tax aspect, so there are certain products which are complex under the financial services sector, and that they are continuous in nature, and as well as subject to continuous amendment, which means that banks and other financial institutions need to be careful with applying the correct VAT rate to those product. An example, it can be letter of credit or letter of guarantee. Those products are continuous in nature, and therefore if they straddle 2023, for example, they will be subject to 10% VAT. If they have been issued after 24 December but straddle 2022, then they will also be subject to 10% VAT to the extent it falls in the year 2022, as well as taking into consideration the constant amendment that can be made to those facilities. So even if an LC on an LG issued before 24 December, but it got amended, let's say on 25-26, you want to change the amount, you want to change the advising correspondent bank, then such change will terminate the application of 5% VAT to the year 2022. So banks would need to declare 10% VAT on the portion falls in the year 2022, and then determine whether it's practical for them to go back to the customers and claim this VAT back from the customer, or absorb it as part of the initial price. Same implication for insurance companies. So insurance companies as well, they provide supplies that are continuous, long-term in nature, and they are subject to constant amendment. I mean, simple example is those group medical policies. So you have a company, it goes to an insurer, the insurer issues a policy holder based on the number of employees and their profile during that date. But then the company constantly, have employees joining and leaving. And such joining and leaving leads to an addition or a deletion to the beneficiaries or to the insured under the policyholder, under the insurance policy. And in this respect, and based on the VAT amendment law, this is treated as an amendment, and therefore if let's say you have issued a policy, let's say in October, November 2021, but after 24 December there was an addition and deletion of insured people, this means that the whole portion relating to the year 2022 under the initial insurance premium will be subject to 10% VAT, and again declaring it in December VAT return, and then taking a business approach whether to go back to the customer and claim it from them or absorb it. And this will be a commercial decision where businesses will need to consider the cost and benefits of going back, as well as the practical burden of doing so. So this is basically just like a high level overview on the impact of financial services. And as you may know that financial services is a complex sector, and again products are not easy to understand, and put that in consideration, the mix of exemption and standard rated. Therefore those products need to be approached carefully in the light of the VAT amendment law and its associated transitional rules. Yeah, George, please.
Thank you. Thanks, Mohammed. It's great to have that experience that you have from the inside of this world. And the points on insurance are very interesting, particularly with the amendments to contracts. Yeah, just moving on and quickly, because we don't have much time left. But on oil and gas, issues on importation will be important. What is the correct rate of import VAT? I think that's quite easy. It'll be the rate that's charged by Bahrain or imposed by customs and paid to the NDR. But if you are lucky enough to have the import VAT deferral scheme and have had that approved, then the determination of the correct rate and evidencing of that you applied the correct rate will be particularly important. Now, in the sector on supply side, much of what it does, if not the predominant element, is zero rated. That leads oil and gas businesses to regularly be in a refund position. And under 10% VAT, naturally, they're going to have a higher input VAT refund, which could have cash flow implications. It could mean the NDR wants to have a closer look at your claim before it releases the funds. So there could be complications there on the VAT refund side. And then manufacturing, very similar to construction, deviations in contracts around design specifications, even the change in delivery date, which could be for, again, bona fide commercial reasons, same as the change in design and specification, could all constitute contract amendments which preclude the application of continued 5% VAT. So a lot of different aspects for different industries to consider, and then some common themes which will apply to most, if not everyone, in respect of these transitional rules, because either they will be buying under transitional contracts or selling under transitional contracts, or both. So complications on running dual rates, etc., etc. So I guess if we, taking that in mind, moving on to what really should you be doing now? And of course, there are a lot of things that you should be doing now, some more important than others, but let's just run through really what will make this a success for you. And look, I was talking with some members of the team this morning, and what we agreed from our experience in Saudi Arabia is that transitional issues will be troubling you all for at least the next year, if not 18 months. We're still having questions raised on whether transitional rules were applied properly in Saudi Arabia. And therefore, we expect that's 18 months almost effectively. We expect these issues will continue for quite some time. So if we just look at some of the key actions that the businesses should be taking, I've already mentioned identifying your transitional agreements. You need to understand what your qualifying contracts are. That's both from a supply and a purchase side where you're a customer and understand where you should be charging or should be charged 5% VAT or 10% VAT. And then once you have those qualifying contracts, you need to continually monitor them, because the breadth of what constitutes an amendment in the eyes of the NBR is really broad. A lot of things could land taxpayers in trouble if they don't treat things correctly. And so those contracts will need to be carefully reviewed, monitored on a regular basis. So you need to put processes and controls in place to make sure that that happens. We've talked a bit about when additional VAT is due. So, you know, on anything which has been amended and additional VAT needs to be charged, then it's chargeable on the enforcement date of the law and put in the December VAT return. Amendments which happen to contracts subsequently, which make additional VAT due, and maybe that amendment takes place sometime in 2022. VAT needs to be declared with respect to the time of the amendment, so keep a careful eye on that. We know from the implementation of that prices need to be published inclusive of VAT in the market, so you know you're going to have to, even a simple task like updating menus, price lists, that's going to have to be done if indeed you're deciding to pass the additional VAT on to customers. And a bit of communication never hurts. Talking to your customers, to your suppliers about the rate change to really firm up what rate is going to apply will go a long way to resolving any potential conflicts. I've already talked about impacts on systems. You'll have to apply 2 rates concurrently for at least the next year, and some things will fall into 2023 that you'll need to deal with. I'm going to skip across these next 2 issues, but if they do impact you, then our contact details are at the end, and feel free to get in touch. But it could impact your financial statements, how this additional VAT liability is going to be reflected on your 2021 balance sheet, and you're running 2 different standard rates of VAT. So how is this going to be reflected in your books of accounts? You know, will you need multiple GLs, etc. With additional VAT costs comes budgeting constraints. You need to factor this in into your 2022 budgets for affected supplies, and definitely into 2020. There are grey areas for everyone. We've covered all of the sectors of Bahrain in the conversations that we've had with clients recently. There are grey areas in every single one of them. As a taxpayer, you know, I would recommend that you seek clarity from the NBR, but in terms of how you frame that, you really should speak to your advisor to make sure that you're asking the right question in order to get the right answer. And lastly, but by no means least, particularly for partly exempt organisations, for maybe real estate businesses, financial services businesses, consider VAT optimization and VAT savings opportunities. This is complex, it's difficult to navigate, so you know, please feel free to reach out to us. We have a vastly experienced team with you know, 2 chartered tax advisors from the UK, an HMRC ex-tax inspector, you know, Mohammed, who's worked in-house in one of the a huge financial services. We can help you with whatever is needed to help you get through this. Now, we've got 5 minutes before the end of the hour. I think I'll just touch on a few of the questions that were asked by the audience, because some of them are particularly interesting. So why is 10% VAT applied on a contract signed before the 24th of December? So that's a contract on which transitional relief could apply. But if you have made an amendment anytime on or after the 24th of December, that will disqualify application of the transitional reliefs, and you will have to be very careful to declare VAT at the correct time from the amendment date and the correct return, and make sure that you issue the required documentation, so particularly important. I have a question here: an electronic contract not signed, does this constitute a transition contract, or may it constitute one? Look, the NBR has been helpful in clarifying that if you've committed to do something for someone, then you will be, and that supply is very clearly described, the consideration is described, the parties to the transaction there, and there is effectively a legal commitment for you to do something for someone in return for consideration, then that agreement can constitute a transitional contract. Now, a specific comment that the NBR has made is that a contract requiring the signature of both parties, it will accept the signature of one of the parties in order for that contract to constitute a contract for the transitional and VAT purposes. But if you have other agreements which are written but not signed, that can still potentially be treated as an agreement. But you would need to look at that on a case-by-case basis to understand the level of the commitment. I use the hotel booking as an example. You have to sign various agreements, or you have to tick various boxes and say you commit to be bound by certain terms and conditions. That can constitute a contract for supply to a defined recipient of a defined service under agreed terms and conditions. So that one probably warrants further investigation. So I think we've got a couple of minutes. I can probably answer a couple more questions. Where can I report my 10% VAT in the December VAT return? There is now an additional box in there for both supplies and purchases to allow you to declare your 10% supplies. Now, you will be asked two questions when you go to complete your December VAT return regarding whether you have 10% supplies or purchases to declare. You'll need to carefully consider whether you do, and then make sure you apply, you answer yes to the appropriate questions so that you have the 10% box available to you, and then complete it with the correct figures. So with 1 minute left, I think it's time to wrap up this session. Thank you to all of our attendees, to Mohammed. Thank you very much for all the valuable insight that you gave us, particularly on financial services, and the timing on the tax due date and the additional grey areas. I think there are still a number of significant questions. Look, if you want to reach out to any of us or to either of us, here are contact details. More than happy to discuss anything raised or any issues you have, and indeed support you with resolving those if they are causing you a business issue. Thank you very much, and I hope you all have a wonderful Monday. Thank you.